Hey everyone, how's it going? Happy Tuesday. Great to see you all here at Zebu Live. So we have got a star-studded panel coming up for you. So what we're going to be discussing is the UK once led the fintech revolution, and we're trying to understand, can we lead a digital asset era? I'll let the panel introduce them, but they have got a mind-boggling amount of knowledge in this sector. So Bivu, do you want to introduce yourself?
Sure, hi, thanks Jolyon. Bivu, I am the GM for Kraken in the UK and also for our new neobank product, Kraken.
Hi, Katie Harries. I'm Director for International Policy at Coinbase, one of the world's largest digital asset exchanges.
Hi, Dr. Lisa Cameron, former MP and chair of the Crypto APPG and currently founder and director of the UKUSCrypto Alliance.
And I'm Colin Payne. I'm the head of innovation at the FCA, Financial Conduct Authority.
Okay, amazing. So we're going to be looking at 4 key themes for this talk. We're going to be looking at the big picture and the context. We're going to look at the yin and yang between regulation and innovation. We're going to be understanding where the UK sits in the whole geopolitical spectrum there, and what is the future outlook. So to kick us off, the big picture and the context. So the UK wants to find the Fintech Frontier. Can it now redefine the global playbook of digital assets, or has the gravity center shifted elsewhere?
Shall I start? It's interesting you say we were once the UK fintech leader. I was at a concert, a U2 concert about 10 years ago. A small venue, very, very punchy crowd. And they kept on trying to play their new hits, but no one wanted, everybody wanted With or Without You. With or Without You. We're kind of like that in the UK sometimes. We talk about the bygone days of when we were leading fintech. And that might be a bit harsh, but I think Jolyon, the center of gravity has noticeably shifted. You know, we shouldn't be playing the old hits anymore. We need to be looking to the future. And if you look at Dubai, Singapore, and obviously the US, the big one, the center of gravity, I think, has noticeably shifted. Now, it doesn't mean we are lost, and there are paths forward when we move quickly and bravely. And our new UK-US partnership has a potential to make sure we're still in the room. But we can't just keep on thinking about ourselves as having done great things in the past, meaning we'll be continuing to be great in the future.
I agree. I think there's still everything to play for. We shouldn't be looking back. We need to be looking forward to the future. I was struck by the comments that were made on the last panel around tokenization. We're truly at a transformative moment for capital markets. We're going to bring crypto infrastructure to traditional financial services. And what that means is that on a Saturday afternoon, an individual in London, but equally an individual in Africa, can bring out their smartphone, get access to global stocks and shares, in their self-hosted wallet, so self-custody. They can borrow against them, they can trade one for another, they can settle with stablecoins, all in a DeFi environment. This is going to require DEXs, it's going to require self-hosted wallets, it's going to require smart contracts. So huge evolution in terms of how we think about financial services. We often think about the unbanked, but actually, I think looking forward, it's all going to be about the unbrokered, and there's a huge opportunity here. You mentioned the task force, the US-UK task force. The US is full steam ahead on tokenization. They're taking a bold and ambitious approach. It's 180 days. I like the fact that there's a deadline to it. And I think what the US is saying is we're going full force. We want to hold hands with the UK. The US and the UK have always had a special relationship. The US wants the UK to hold hands, move into the future in terms of the future of capital markets. And the UK needs to show that it wants to be standing there alongside them and move forward as well. So a huge opportunity. I don't think we can give the answer now in terms of whether the UK will kind of hold its ground. There's a huge opportunity, and it needs to grab that opportunity with both hands.
Yeah, I mean, I would agree. I think, though, if you go into the Parliament right now and you ask the MPs, many would say the UK is at the forefront of fintech in the world and has a leadership position. So there's a bit of denial there. There's a bit of education that, you know, organizations here. I think everyone's responsible for engaging and collaborating in the Parliament to make sure that the MPs are up to speed, that they realize that there is a window of opportunity. And actually, this sector is so fast-paced and moving that if we don't take this opportunity, we will be left behind. When I was in Parliament only just over a year ago, we were talking about having a second mover advantage. Well, you know, we're not going to be the second mover now, are we? We're going to be a bit further down. So I think, you know, the time for talking's finished. We need to see the Parliament pushing. We need to see the companies being registered here. We need to overcome some of the hurdles. We need to make sure that companies can have bank accounts, for instance, to pay their staff. There are basic things we need to overcome in the UK to make sure that we are in a leadership position and we're where the MPs want us and think that we should be. So I think my call is to everybody here who's interested to make sure you engage with the APPGs in the Parliament, make sure that the industry's voice is heard, and that this is very, very important for future growth, which is a key priority of this government. So we need to work together to make this happen.
Brilliant. And Colin, did you have some thoughts on that?
Yeah, very exciting, and I agree with a lot of what's been said. From the regulatory point of view, I look back, maybe I'm a bit of an old rock fan myself, I'm probably the oldest here. It was only 12 years ago, really, that fintech started to boom, right? I mean, so when we talk about this history that we're talking about, as though it's in the long, distant past, the FCA started Project Innovate 11 years ago, just 11 years ago. And we started with the first regulatory sandbox in the world. And it's been copied by 95 other regulators around the world. Flattery is a wonderful thing in terms of copying what we do. We are still number one in terms of regulatory innovation, I would argue. A lot of people talk about MAS and Singapore. They're great, brilliant at startup. But the maturity of the UK market, since it was started 11 years ago, it's deep, mature talent that exists, which I think we really should rely on. It's fantastic. And I think we're still pushing hard in that direction to keep innovating. So the FCA launched the AI Lab this year. Again, it's another world first. World first, with a massive correspondence from companies probably around here who have joined us, which is great. But I think you're right. We've still got to look to the future. But that center of gravity is fluid. It's an immature market. There is lots of time to mature. We have to be there, fighting, right on the front foot. But we're not going to apologize for being cautious in some concern. You know, there are areas where we want to look carefully at what it actually means. We all remember NFTs. We all remember Bored Apes. 2 years ago, 99% drop in value, almost overnight. There are areas where we have to be very cautious where we approach. But I think the technology absolutely is the future. Let's get that right. Let's test it. Let's move with data and evidence. And we'll, as the regulators, support anyone that's in that group, for sure.
I think one of the things that would be great to see, I mean, obviously NFTs is an outlier example, not an outlier example, but a very different example to tokenized equities, as Katie was talking about. If we wait, so sandboxes were fantastic in 2016, truly. First of a kind. But building within a walled garden right now for something where we need to understand how live markets react in a controlled way is the only way forward. We can't design a tokenized equity regime with a consultation process that lasts 12 months or apply existing regulatory frameworks to something truly novel and innovative. Otherwise, we'll be left behind. We need to find a way where we can take Sandbox Mark II in a controlled way, where we can do it with live testing, live people, live companies, live stocks. And this is what the government have been crying out for as well. They've been talking about how to bring growth into the country. This is how you do it. You offer UK equities globally.
Yeah, I mean, I completely take the point. You'll know that we've got live testing in the market now. So AI live testing, which is with the customer data in live market, but overseen by the regulatory comfort you expect from us. It's a balance between that risk of moving forward quickly and the trust in a market. Now, I believe for digital assets, that market will rely on trust. In the long term, sustainable relies on trust. So I think if we can work with the industry to build the trust in the UK market, I think that's the way forward. And it's a unique position the UK's in, because we're separated from Europe now. and we can work very clearly, obviously with help, with our US friends. And I think that's an incredibly strong position. Imagine that UK differentiator as being a trusted partner going forward. I think it's really special.
You heard it here first, guys. Live testing of tokenized equities coming next week.
Yeah,
Colin.
no, but I think that's right. I think if you'd asked me about 18 months ago, with Mika coming on stream, where the UK was sitting, I would have been thinking we were, really quite far behind. I think with the US shifting up a gear, I know from speaking we took the Lords and some of the MPs to the European Parliament in June, and the members of the European Parliament are speaking about having to adjust and amend MiCA now. So in a sense, because they've already configured what they were doing, they're now having to kind of reshift. We can actually take this opportunity and momentum, and the US really want the UK to succeed. So there's a great opportunity here to kind of grab the bull by the horns and really charge ahead. And I just think we need to make sure that everything's aligned, that the noises come from FCA are aligned with government, with the politicians and with the industry, and we need to move this forward. Now is the time to do it. We still have the opportunity, but I'm concerned that if we dilly-dally about, we're going to be left behind.
Yeah, and I think it brings in a good point. So we know we have a lot of the fundamentals in the market, the talent, the companies, the entrepreneurial spirit. So I guess it's an open question of, does the UK need to take more regulatory risk to compete globally, or does that undermine the strength as a trusted market?
Big question, that one. The FCA has publicly already declared it's looking at its risk appetite. That's on the basis of discussions with Treasury as well. So obviously there's a pivot going through at the moment. We know that. Our primary concern, though, is consumer. So the consumer duty, we're a conduct authority. We're not a prudential authority. So we're concerned with the outcomes for consumers. And you only have to look back a couple of weeks, or is it just a week maybe actually, to look at where we had the pricing issue through some of the exchanges worldwide. And there was obviously a very rapid drop, a repricing, and the over-leveraged positions actually had some pretty major impacts for some large investors. Actually, and sadly, leading to one or two really notable suicides. So we have to be concerned about the outcomes of the market, which can swing. So I don't think the FCA is ever going to apologize for that. It's always going to think of the consumer, but I do think there's room there. I do think there's room there.
No, I think we're all in agreement that we absolutely have to get the regulation right. We have to protect consumers, but we've also got to create the guardrails that mean that innovation can happen and that firms have the confidence to innovate and grow within the UK. But I think there is obviously a balance to be had between regulation and innovation. And just as an anecdote, I think it was the state of Massachusetts which actually banned retail consumers investing in Apple stocks when they went public in the 1980s on the basis that it was unproven and too risky. And I think it's an important lesson for us. I think there's, going back to kind of crypto, we were talking a little bit about tokenization, but talking about crypto, I think there's, we hear a lot about the kind of speculation in the market, and I think there is some speculation in the market, but I think that reflects where we are on the adoption curve. Just taking kind of ETH as an example, individuals might hold ETH because they need the gas fees to send an NFT to someone, for example, but you might also hold ETH because you think that the future of the internet is going to be built on the Ethereum blockchain, and so I think there's good reason why we see some speculation in the market, but I think that will level out as the market and the technology matures. But I also think it's important that regulators don't see crypto as a monolithic bucket. I think I see a lot of people talk about the risks around crypto, but you also have stablecoins, you have Bitcoin, you have meme coins, but you also have technology-backed tokens that are powering the technology. And I think it's very important that we're very clear on what we're talking about when we talk about crypto. And obviously, there's obviously a lot of focus on meme coins. They might require different kinds of regulation, but we don't ban people from holding pins. People wear pins to show affiliation with a particular group, and we should think about it in the same way we think about meme coins. But I think there's a really important example in the UK in terms of where I think it has gone too far. And the example I would give is the kind of the financial promotions regime, where you have to wait 24 hours before you can onboard to buy Bitcoin, for example. Now, Bitcoin is the, thank you. Bitcoin is the best performing asset of the last decade. It doesn't make sense that you have to wait 24 hours to onboard to purchase Bitcoin. And I think it would be Bitcoin, for example, and ETH as well, has similar levels of volatility as mid-cap equities. So very hard to see why they sit in the same bucket as other types of crypto assets and have to comply with these frictions. So I think that's one area where we think that regulation over innovation has gone too far, but always a careful balancing act.
You'll be glad, sorry to interrupt, you'll be glad, Katie, obviously I'm on the crypto policy board now, and I was responsible for surging the ETN policy through and demonstrating the difference between Bitcoin and other coin, potentially, and getting a bit more of that granularity in the understanding. Because, as you know, I'm an OG. I go back to 2011 with some of this. So, you know, my original Bitcoin purchases were a long, long time ago. So, yeah, understand the point. It's a good point. I think the 24-hour period is one to talk about. That's interesting, because I think if you're saying this is a long-term strategy for investment as well, rather than speculation, I suppose I'd just ask the question, what does 24 hours matter? Just a question philosophically.
I would go back to answer that question. I'd go back to the FCA's mantra, which is same risk, same regulatory outcome. And if you're determining the treatment of different assets based on risk and volatility, then if Bitcoin, ETH, and actually the top 20 tokens by market cap have similar levels of volatility as US tech stocks, for example. So you could make the case that based on same risk, same regulatory outcome, if you get access to US tech stocks without having the same frictions, then you should get access to the top 20 tokens by market cap as well. But I think a good starting place would be maybe stablecoins, Bitcoin and ETH, given that it's
yeah.
the volatility.
Yeah, but I mean, I think that it's been a journey for the FCA, and I think it's fair to say that, you know, you had to tread carefully at the start. I think I get the impression now that things are really shifting, that there's faster pace now, you know, that there's more direction in terms of looking at a reappraisal of risk in the sector. Over the span that we've recently had. And I had the discussion also with Vara last year, and they were telling me that they have to balance innovation with risk, and it's part of their regulatory duty, and I think that we just have to get the balance right here. And I think that balance has probably shifted as the industry has matured as well.
Exactly.
We talk about regulatory pace, doing things with data, doing things with clarity. This is the most obvious way. It's great that you know about it, Colin, and it's fantastic that the FCA are having conversations. But why are we still having conversations? Why aren't we already scoping out Bitcoin and stablecoins and ETH from the FinProm regime, or part of the FinProm regime? Why are we waiting until 2026 when the full regime comes into play?
I mean, things take time. I mean, I can't give you any excuse. It is not a pace that you can just switch on. We're legislated.
We switched it on when you switched it on when the full FinProm thing came across.
We're legislated. We're legislated. We have a process to go through under legislation. That isn't our control system, unfortunately.
No, and actually that's why industry needs to really uppace and engage with the legislators as well. Rather than waiting for something to come from legislation to the FCA, we need to be making the argument to all of the parties in the Parliament to make sure that they realise how vital this industry is for the UK. I mean, I know that the children know it, because we had the Children's Parliament come to speak to us, and they said, you know, that digital skills and engagement in the digital economy was their priority, and that they knew it was going to be jobs of the future for them. So we need to reshift, you know, the way we look at this across the whole Parliament, including our education system, because, you know, it's a digital revolution that we're in now. Children are very digitally native, and we're at what, is it 14% of the UK now has
some stats say 20.
Yeah. So if you go back to when we started the APPG, it was very, very small. Now it's at 14%. By the time of the next election, could be 20%. This is a huge voter group as well. So actually, the politicians have to listen. You're not talking about small numbers, you're talking about people that can have influence, and that's why, you know, the work that we've been supporting with Stand With Crypto and that Katie's been doing, I think is very vital. But I would also be saying, make sure you engage with your parliamentarians. Go and speak to your MP, tell them how important this is to the jobs that you're creating in the UK, and make sure they raise it in Parliament.
I was just going to add, perhaps at some point we should get on to what the UK is doing well, but I was just going to add one point, which is, I think there's obviously a lot of focus on regulating the sector, and there's a lot of great stuff that we can come on to in terms of what's going well. But I think there is a question out there, which is, like, where does the UK want to stand on retail participation in the crypto space? In my mind, if you want to harness the benefits of Web3, you have to embrace retail participation. If you want to harness the benefits of the next era of tokenization, you have to embrace retail participation. And that's one area where I think there's debate within the FCA in terms of the extent to which you want to lean in. But the benefits to consumers are huge in terms of what the technology promises. But we've also, as you say, got to look at the risks, and there's a careful balancing act associated with that.
Brilliant. And so, I mean, just taking, I think policy is a broad term. You know, how does the UK stack up against what's happening in Europe, what's happening in the US? Because I think it'd be great to break down, is it our approach? Is it the speed? You see, you know, in the US, they're potentially getting all of like the ETPs life so people can invest, the retail participation, or is it the companies that we need? So what's the kind of difference between the policies in those regions? And is that our approach, is it speed?
Shall I take this one? I've been giving Colin a bit of a hard time, but I think the UK has always been very UK regulators have been very outcome driven and very consultative, and absolutely we in the industry appreciate the openness and the noticeable changes that happen on the back of feedback, and I cannot fault that. Obviously, we need to balance perfection and innovation, or speed and innovation. The US somewhat chaotically came up with something, but it's something that moves the conversation forward and is open for innovation. Micah, we saw they have something, but it probably does the opposite. So we need to find we need to find the best balance that protects our consumers. We need to continue to listen to industry, as you have been doing, and the recent consultation papers reflect that. I still think we can go further, but that's what the process is for, and we have a timeline in place. Obviously, my ask would be for some things that are more obvious, we do those earlier, but I take your point, Colin, it is not all in your hands, and whilst you'd love to do it, it's not the way.
Some things I can't help.
Yeah.
But I think you're right. I mean, you would have noticed, I think a couple of weeks ago, we published a call on funds, tokenization of funds, which I think surprised quite a lot of people. I think it came out of left field for many. So I know you were talking about tokenization of stocks, individual stocks. I think from my point, I used to be a trader. So one of my first job in the city was a trader. There's a lot of education needing to be done. So I suppose one of my little worry beads in all of this is, yes, there is an early adoption process for a lot of young people who are quick to jump into easy trading, whether that's easy crypto or stocks, shares, whatever it might be. There is a maturity in their thought process as well. And yes, there have been some great gains in the early days. That doesn't necessarily continue, as we've seen. This year, I think, what is Bitcoin this year, year to date? 9%, 10%? I don't know. Still good, but it's gone like that in the last few weeks. The maturity of those who are investing in all stocks, all shares, and all coin, I just think needs for us to concern ourselves with the education side as well. So making sure the general population, not just the percentage, the 14% who are in crypto now. My son's the same, he's dived in, he's loving it, he's enjoying it. He's got the benefit of me to help perhaps, or maybe that might be pulling him back, to be honest. But it has stopped him losing money as well. And of course the FCA were the ones who looked at FTX and said no. And I think that saved a lot of heartache in the UK, because we know how that ended up. So I think there's all these things to consider, I think, in having a realistic view of the market. I think that's important.
Shall I jump in? So in terms of how the UK is faring, I actually wanted to say a few positive things, Colin. you're obviously pursuing your crypto asset roadmap to regulate the sector. What we're seeing is that the UK and the FCA in particular are really benefiting from second mover advantage. And that's a concerted effort. We're really seeing them diving into what MiCA did well and what it didn't do so well. And we're seeing that reflected in changes. And that's on nitty-gritty issues like entity structure, custody rules, but making sure that there's access to global liquidity for UK-based firms, UK-based customers. And that's not the sexy stuff. And actually, I don't think the FCA gets enough credit. But what I would say is, I really think that you're getting the nuts and bolts right for the regulatory framework for crypto asset exchanges, the centralized platforms. And I think it's really important that we share that with the FCA because it's a lot of hard work that's gone into that to get that right. The area where I think that we're perhaps going off course, potentially, is on stablecoins. I actually think that the stablecoin proposals are the most onerous of most jurisdictions that we've seen. And in particular, the proposals coming out of the Bank of England and the cap on holdings. Now, if you have a cap on holdings for institutions, in my mind, that's a de facto ban on the use of stablecoins in wholesale markets. We've talked a lot about tokenization. If we really want to be a world leader in tokenization, we need an on-chain settlement asset. The US ruled out CBDCs because it realized that if it wanted to achieve its tokenization ambitions, it needed to lean into stablecoins. In the UK, we're still trying to decide whether is it CBDCs, is it tokenized deposits, is it stablecoins, but actually it's not stablecoins because we're going to put a cap on limits. And so I'm concerned about the direction of travel on stablecoins because you need stablecoins to realize those ambitions.
Obviously, that particular cap isn't in our purview. We're working with the bank to move on an evidence basis for this. So what we've brought to the party, if you like, hopefully everyone will appreciate this. I opened my sandbox to the first GBP minting stablecoin as soon as I could. We brought them in. We have trialed. We have used evidence, and we'll continue to do so. We plan to have trials around this, GBP and Euro stablecoin minting, because of course, from our point of view, we look at Tether as actually a geopolitical issue as well. I mean, with 99% of stablecoins in US dollar, there is consideration of what that means for all economies at that point. So, take your point, what we're bringing is the sandbox mentality, but a practical sandbox mentality, one that we test minted stablecoins.
If I can just come back briefly. One area that is under your purview, under the FCA, is there's proposals to ban the ability to earn interest on stablecoin holdings. Now, the UK says it wants to have a mixed payment ecosystem, but to have a mixed payment ecosystem, you need to have a level playing field. Stablecoins need to be able to compete with other forms of digital money. That's both in terms of capital requirements. So at the moment, we're seeing proposals where the capital requirements for stablecoins will be much more onerous than e-money firms, for example. But also, none of the benefits of tokenized deposits, and the ban on interest is a reflection of that. I think there's concerns around deposit displacement and the impact on the banking sector. That just hasn't been proven. We haven't seen that in the US, we haven't seen that in the EU, and so I'm concerned that, again, we're putting restrictions on an innovative new form of money on the basis of something that's unproven, and actually goes against consumer duty. The consumers would benefit if we're able to give consumers rewards on the stablecoin holdings. So that's one area where I feel like the debate's kind of been closed down because we're trying to protect the banks and deposit placement and what does that mean for credit to the economy, but totally unproven and not in the benefit of consumers.
I hope this is a educational thing though, Katie. I think the conversations I've had with the FCA on passing on interest is less about the principle that MiCA came up with on why they wouldn't do it, more about the business models of the issuers. So protecting how they make money and making sure that they have sustainability. Not all issuers work in the same way, so it's incumbent on us and the issuers to educate the alternative ways of them making money and why it is sustainable for them to pass on deposits to end consumers. The bank probably have taken a different view and more of a protective view, protective upon themselves and maybe the, dare I say, traditional finance industry or high street banks. And I don't know if it's education or not, or even further, but there's a concept that they have of your money versus our money, which is totally unfounded because all GBP is GBP. Stablecoins give greater access to the GBP. We've seen it, you mentioned with Tether, and all other USD stablecoins. They've just given access to the globe to hold a dollar. In some regards, it's actually safer than holding it in your bank because they're actually backed 1-to-1 with a pound, which isn't rehypothecated.
So, I mean, I think what's different in the US is there's a very clear direction of travel, and it comes from the top. And it's come from the top to say this is the direction we're going in, make it happen, basically. And everyone is working to make this happen. I think we need something similar here. We are working with the MPs and the members of the House of Lords as part of the UKUSCrypto Alliance. We've had Chairman Pham come to speak to them about what's happening in the US, about where the UK can benefit with the continued collaboration. We're taking the MPs and Lords over to Capitol Hill at the end of this month for them to speak to the legislators there. We are also, I'm just back from Dubai, where many people that I would normally see here, and many of my travels are now located. So I think we need to also be very cognizant that this is a transitory sector. If things are not working well in the UK, people will go elsewhere. And I met so many people last week at the conference in Dubai who have moved to Dubai reluctantly, but they say, well, they are empowering the work I'm doing and my company. I want to see that happening here. And I know it's going to take time, and I know we need to get it right, but I think we all need to be on the same page. We need to have a very clear direction, and we need to be identifying the issues that are holding us back and working on those with priority to overcome them. Because the UK is an amazing place, we have fantastic talent, but so far people are telling me I can start up here, but I can't scale up here, I have to leave. They don't want to leave. So what is it that we're doing that is making people have to go elsewhere? We should actually be bringing more people here to scale up. These are the things that we need to overcome, and we need to make sure that government hears this industry's voice very, very clearly, because I take your point, we do need to look out for the security and consumer protection, particularly for young people. But the young people from the Children's Parliament who came to talk to us were saying, you need to make this safe for us, but we want to get on with it. They don't want to wait. They see their future ahead, and they want to be engaged in technology, in AI, in digital assets. My goodness, we were talking about fiat in the room, and one of the members of the Lord said, is that a car? So we need to educate in the Parliament. And when the guy from the Roblox came, who I like to speak to because I spend a lot of money being a mother on Roblox, he asked everybody in the room, we had the Lords, the MPs, and the young people from the Children's Parliament, who has heard the term Web3? The kids from age 8 to 15 have their hands in the air, hardly any MPs, and none of the members of the House of Lords. So we need to get ourselves upskilled in the UK, in the Parliament, get the legislative direction, empower the FCA, and move things charging ahead. And I think there's a great will for people to do this in industry, but also we have the support, as you said, of this new agreement with the US to try and supercharge it in our benefit. So let's take that opportunity and not come back next year and have the same discussion again.
Amazing. The amazing thing is we could go on all day. We do actually have time for 2 questions if anyone had a question. I don't know if we, maybe I'll just be the roaming. Oh, we've got a roaming mic. Brilliant. Sam.
Hi, thank you. This is a question for Colin, but I'd also like to open it to the other panelists. The FCA recently lifted its ban on crypto ETNs for retail investors. How do you think young investors, many of whom are showing strong interest in these products, will respond to this new opportunity?
I hope it's positive. I think it's, for me, as we move forward, I think we talked about the definition of different types of crypto, whether that's from meme through to Bitcoin, through to stablecoin. The indicative progress that we're making, I think, is to focus on high quality assets. And the ETN around that, I think, is the first lifting of a ban, which I think is really relevant to young people. Obviously, I think friends will look at direct investment as well. But for us, that package is a first step down the path. So I think they'll respond hopefully well, and we can educate them around it. My point about education is important.
Second question over here, Matt, a gentleman in the hoodie.
Hi, panel. Thanks very much for the discussion. Colin, you've taken a bit of a kicking today.
No.
I think we're going to need a pint after to sort this out.
No, on a positive note, so I was lucky enough to present my project at the FCA Expo last year, and it was a brilliant event and very welcoming and superb team, so well done to you for that. My question is, as sort of builders in the space, we need to understand regulators. Regulators need to understand us. And I think the perfect opportunity is the education system. We've got some fantastic universities and some really good people that understand the technology to be mediators between the two. Have you thought about that, and are you putting that into practice?
Yeah, it goes back to my point about education. You'll hear this a lot from me. I think there's a big job to do. I mean, obviously, we're not in a position to educate the UK, but we are in a position to, I suppose, lean into it a little bit, to convene like we do on the sprints and on the activity that we do. The innovation pathways that we run for firms are a good example of that. The AI lab, we've just commissioned some education around AI as well, to go back to firms. So those firms that come into our perimeter, if you like, we'll give them the education as to how to use AI in a responsible way. And it's the same with crypto. I think there's more we can do there. We work with academics all of the time. I mean, many of us work as academics ourselves, so we're very happy to lean into it. It's something that we think we're passionate about anyway as people, so we'll do more and more as we can do. We're obviously limited in what we can do in terms of time resources. My team's quite small, but by coming out and speaking to industry like today, I don't feel it's a kicking at all. I feel this is a good conversation, it's a good debate. That's why I'm here. It's to lean into it with you guys. I mean, these guys know that I'm willing to be here for that reason. And frankly, I don't feel bruised at all. I feel as though we actually make progress by this. That's what we're here for.
Very heartening to hear. Thank you.
Amazing. That's all we have time for. If you are really passionate about getting involved in the UK policy, there's something called Stand With Crypto in the UK, which is a grassroots movement. It's now got nearly 150,000 advocates signed up for the movement. We've got a petition live that's going in across. It's got 25,000 signatures. If we get that to 100,000, the UK government will be asked to respond on their stablecoin leadership policy. So please do check it out after this. Other than that, please give a massive round of applause to these panelists. A really great discussion. And have an amazing Zebu Live. Thank you so much.